Good day, fellow investors. Apple stock analysis with full year earnings and AI concerns. There was a little bit of down last week from Apple, almost 5%. Similarly to Microsoft, also 5%. In this video, I want to give you what we do here, and that is a value investing perspective on things, the risk and reward based on Apple's full year earnings. And for those who don't know me, I've been investing for 22 years. And this is a very interesting Apple March 30, 2016 article where I discussed investing in Apple for the next 40 years, clear buy rating, and the P ratio was just 10, where Apple had its phone, had its cash globally, everything on top, everything that they offered, the services was for free. We have also recently discussed Microsoft and Apple at extremely high valuations, which also changes the risk and reward when it comes to investing. But let's focus on Apple results and returns. Earnings are a little bit down based on the reversal of the European General Court's state aid decision. Adjusted earnings per share up, sales also a little bit up, so that was good for Apple. A little bit down on products, but services change things, and therefore there is the growth. Net income actually down, but if you reverse the charge, then it is then in line with the 100 billion that Apple usually makes. However, this is very important here. Earnings per share, yes, but if I look at the number of shares that Apple has outstanding, the number of shares went down by 2.5%. So Apple spent 95 billion on repurchases just to lower the number of shares outstanding by 2.5%. And this is because of the high valuation. Thus, the benefits of Apple buybacks since 2016 that I wrote that article have been lower and lower as the price goes higher and higher. That's something to keep in mind. And the risk is therefore clearly the valuation at the P ratio 36. Now, a P ratio 36 means there must be growth, at least 2x coming in the next few years. And here we have to discuss AI, or as Apple says, Apple intelligence for the rest of us. Because if we look at what they are offering, help you to write, express, get things done effortlessly, new era for Siri. When you put that into perspective, Microsoft's stock price amid increases AI spending without any results. Will you pay more for this, or do you expect to get this for free when it comes to investing? Do you remember Zoom? Do you expect us to communicate for free, or are you going to pay? And this is something that I read from an article. So developing AI and everything, Amazon, Google, Salesforce, everyone is developing their own AI. Not to mention China, because they are also working hard on that. So if everyone is developing something, it will be highly competitive and there might not be a winner. So you might buy a phone but expect everything there for free, as you have a lot of free things now on these powerful phones. So I don't know whether Apple will be able to push to double the net income from 100 billion to 200 billion just on AI. And therefore, with, let's say, a stagnating situation, yes, we can say that the governments, as we discussed yesterday, must keep pushing this bubble and having low interest rates. Therefore, also Apple is cheap. However, if things return to normality, put a P ratio of 18, Apple is back where it was just a few years ago, as it is a stagnating, no-growth company. And that is 50% down. Could happen. I have lived long enough to see Apple at a P ratio of 10, but for value investors it's too much risk. I wanted to wait for Apple's yearly earnings to discuss it, and we'll keep on watching because you never know when it might get back to a P ratio of 10. The market usually overshoots both on the upside and on the downside because this is a crazy market. For more crazy market overviews, subscribe.